Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please be sure to follow and leave a 5-star rating. Folks, we have to start with Vanguard. They are bending the knee. They are capitulating. These folks have been anti-crypto for years, skeptics saying they're not going to add Bitcoin ETFs and much more. And now we are seeing a complete 180. So they are hiring a head of digital assets to develop their multi-year digital assets roadmap and drive execution. Of course they are. We've talked a lot about this over the years, guys, that all the laggards will eventually have to catch up because if they don't adopt Bitcoin, crypto, and blockchain technology, they're writing their economic death sentence, right? All of Wall Street is building the infrastructure not only for people to invest in the asset class, but are using the actual blockchain technology internally and to move funds and much more. And Vanguard, better late than never, right? Here they are capitulating. So some more details. They are hiring a head of digital assets to lead their strategy for tokenization, stablecoins, blockchain infrastructure, and client-facing products. Guys, incredible. Remember all the heat they took when they came out and said, we're not going to offer Bitcoin ETFs. And, all of social media was going after them and people were saying they were closing their accounts and moving to other competitors on Wall Street. And I think they learned their lesson, right? It's just foolish that they would take that stance. It's one thing to say, hey, look, we're going to crawl before we walk and before we run, versus saying, we don't want to do anything with crypto. We don't care about it. That was the idiotic approach because then you start alienating customers. You create a negative perception about the company and more. So let me give you some more details. According to the job description on Vanguard's website, the executive will be responsible for determining how Vanguard participates in digital assets, including evaluating client-facing products, tokenization, stablecoins, custody models, blockchain-based settlement, and digital asset operating infrastructure. The role will also represent Vanguard in discussions with regulators, clients, and industry groups. So, folks, you're seeing again the bending of the knee, and all the naysayers and the detractors are capitulating and going all in on crypto. So, this is incredible news. And I think pretty much all of Wall Street's here. We know Morgan Stanley was late, but they weren't anti-crypto. They didn't put that type of messaging out there, but Vanguard was. And now, like I said, better late than never. So crypto is winning for sure. Moving ahead, New Hampshire lawmakers to hold hearing on $100 million Bitcoin bonds. So not only is the federal government adopting crypto in different ways, we know there's a Bitcoin reserve bill in place, the Clarity Act, and crypto tax legislation, much more. We have states buying Bitcoin. They're buying Bitcoin ETFs. They're adding it to their pensions. Well, this is a unique one. The proposed bonds will be backed by cryptocurrency, but still need approval from the New Hampshire Governor Kelly Ayotte, if I'm saying her name right, and the state's 5-member executive council. But the fact that we are here, where these things are actually being presented and discussed, is amazing, guys. I mean, we've come such a far way. So, in an update to the New Hampshire Governor and Executive Council agenda, the state's Business Finance Authority has scheduled a meeting for Wednesday regarding the proposed issuance of $100 million in Bitcoin-backed bonds. The BFA approved the bond in November 2025, saying that it planned to issue the vehicles upon approval from Governor Kelly Ayotte and the state's 5-member Executive Council. Here's a quote. This is an innovative way to bring more investment opportunities to our state and position us as a leader in digital finance without risking state funds or taxpayer dollars, said Ayotte on the bonds following the BFA approval. So you have states competing now for crypto businesses, crypto revenue and all these things, right? Because crypto is a booming industry. And as we've been talking about, the direction the puck is heading in is that this asset class is going to be like a black hole sucking in all the other assets because they're all going to be tokenized on the blockchain. So it's not going away. And despite the ebbs and flows of the markets and bull and bear markets, right, it's just part of the cycles. And once we have legislation passed and now we have all the bridges for institutional investors to put a lot of capital in, we are going to see higher valuations of these blockchains and the companies, and of course, their respective tokens. So the potential high value Bitcoin backed bonds signaled the US state's move toward friendlier digital asset policies. New Hampshire was the first state to approve a law establishing a strategic Bitcoin reserve in May 2025, allowing the government to invest 5% of public funds in digital assets with a market capitalization exceeding $500 billion. Guys, we are seeing adoption on many levels, from TradFi institutions to governments, both on the federal and the local and the state, of course. So incredible stuff. Now, moving ahead, Bitcoin and XRP draw Japanese firms as weak yen drives treasury diversification. SBI VC Trade says corporate demand for crypto is rising as a weak yen pushes firms to diversify reserves, part of a run that took its registered accounts past 2 million. Now, if you've been a listener and a viewer of this podcast, we've talked about, looking at the dollar and the DXY, and when that is weak, you see people flock to assets, right? Because a weaker dollar usually has the inverse effect to assets, where assets start to get repriced. The weaker dollar and fiat currencies like the yen, when there's money printing happening and debasement happening, obviously they go down in value, and obviously assets continue to rise. It's the same thing over and over. And it's not just for crypto, it happens for stocks and precious metals and real estate and much more. This is why we're here investing, so we can beat that debasement, right? We can have our assets outperform that debasement. And yes, we do have to take profits and get the fiat currency. But the point is, instead of having your fiat currency just sit under your mattress or in a savings account, you can put some of it in an asset, let that asset outpace the debasement, and then you take your profits and you have enough money to do what you need to do to live, to retire, and all those things. So let me give you some details. Japanese companies are turning to Bitcoin and XRP as a weak yen pushes them to diversify their corporate treasuries, according to SBI VC Trade. As the crypto exchange's registered accounts passed 2 million, the crypto arm of the financial group Tokyo-based SBI Holdings said use of its corporate service, SBI VC for Prime, has grown as the weak yen drives firms to spread reserves beyond cash, with added demand from companies that hand out Bitcoin or XRP through shareholder perk programs. It reported the account milestone on Tuesday, roughly double the 1 million it accounted in 2025. The 2 million figure combines its VC trade and Bitcoin services and follows SBI VC Trade's April 2026 merger with sister firm Bitcoin Japan. The company plans to fully integrate the two brands around the end of December, which it said could cut costs and unify service levels. So across the globe, demand for crypto assets is growing. Obviously, here in Japan, you're seeing a lot for Bitcoin and XRP. And we know that SBI Holdings and Group, the CEO and the whole firm, they were invested in Ripple at one point. I don't know if they're still invested, but they're very bullish on XRP. So it's no surprise that XRP is here. And obviously, Bitcoin being the top asset or crypto asset in the world, right, by market capitalization. So you naturally, a lot of people are going to add that to their portfolio. But this is very good to see, guys. Very, very bullish. Now, guys, I'm personally accumulating Bitcoin and altcoins like XRP. And a way you can do that is via an IRA on iTrustCapital. Now, I know what you're going to say, Tony, why would I want to invest via an IRA? Well, you get huge tax advantages. Many of you know if you sell for a gain, you have to pay capital gains taxes, such as long-term and short-term capital gains. Well, if you invest via an IRA, you can be sheltered from those taxes. So this is where if you have a long-term view on these assets, including precious metals like gold and silver, you can do it via an IRA and iTrustCapital. So again, you can invest in both crypto as well as precious metals like gold and silver, and you can buy them 24/7. It's low cost, no monthly fee. And if you have an existing 401k or IRA, you can roll it over to iTrustCapital's version. And folks, the gold and silver products are not paper, gold and silver. They are the physical assets. So if you ever want to redeem them, you certainly can do that with this platform. And they also have a great custody program, which uses Coinbase custody. So you're getting institutional grade crypto custody, which BlackRock uses. BlackRock uses Coinbase Prime. So you can sleep at night knowing your assets are safe. So this is a great option. It's low fees. You can go in and out of it 24/7. It's a closed loop system. So even if someone hacks into your account, they can't withdraw funds. It's only set up to go to your bank account. So I have an account with them, and if you sign up with my link, you can get $100 funding bonus. And I also have a representative at iTrustCapital. His name is Ryan. So you can email him. His contact information will be in the description. If you have questions, if you are going through the sign up process and you're like, I don't understand what this is, you can reach out. So you get a bit of the white glove service, if you know what I mean. So you got to check out iTrustCapital, see if it's for you. Go to itrustcapital.com/go/thinkingcrypto. Link will be in the description. Now, folks, we got a major update from the SEC. So, US SEC to propose crypto rule as soon as this month to ease startups and fundraising. So, the SEC has been doing a great job under Paul Atkins. Obviously, I've interviewed Hester Peirce many times over the years. And the SEC, they're going to put out guidance on reg crypto. That's what we're waiting for. But also, they need to provide guidance on tokenization. So let me give you the details. The US SEC is set to tackle a new crypto rule proposal as soon as this month that would shield crypto businesses from securities regulatory demands in significant ways, according to an updated agenda flagged on Tuesday. The idea, known as regulation crypto, also known as reg crypto, would establish temporary exemptions from registration for developers first pushing crypto investment contracts, would allow a certain amount of fundraising, and would set up a safe harbor for issuers that are backing away from managerial efforts over a security. Details first outlined by SEC Chair Paul Atkins in March. Now, the safe harbor, that should ring a bell. Remember, Hester Peirce put this out like years ago, I think like 2018, 2019. She's been doing a great job. So essentially, they're taking that. I think they're going to add some other things. But token issuers are going to get guidance. Hey, can you issue a token? Yes. What can you do and what can you not do? When you're fundraising, how much can you fundraise? As far as distribution of the tokens, how much is allocated to a foundation and how much is out there with the, maybe in an escrow, like what Ripple does, right? Things like that. All those nuances. I'm really excited to get the details here. I hope I can get SEC Chair Paul Atkins on to talk about it. But this is going to be big, guys. This is what we've been waiting on for a long time. This is essentially an addendum or an addition to the Howey test, right? Because it's focused on tokens, which, Gary Gensler was a clown of all clowns, but we know he was being lobbied by the banks to, attack crypto. But, you can't use the Howey test in the 1930s, which was focused on orange groves, to regulate blockchain networks that are distributed globally with tokens running on those networks distributed globally, right? It's ridiculous. But anyway, nevertheless, I digress. Let me give you some more details. It's one of the first significant SEC moves being made on behalf of crypto businesses after the agency issued the first taxonomy earlier this year to clearly lay out how digital assets should be defined and treated for regulatory and jurisdictional purposes. The agency is additionally working on an approach to foster tokenized securities. So again, we're waiting on reg crypto and the tokenized securities guidance as well. So we got great rulemaking and guidance coming from the SEC. And this is stuff they have to do anyway, right? And I know some people are going to say, why are they doing it ahead of the Clarity Act? Well, the Clarity Act just puts everything in order and stamps it and makes it law. But the agencies actually have to do the rulemaking, right? So it's great that the SEC's front running the Clarity Act, and maybe, we get the reg crypto, possibly the tokenized securities guidance, and it dovetails at the same time of the Clarity Act passing. That would be huge. I think, again, if we look at the charts and the rally that is kind of building momentum here, Bitcoin could hopefully break through that 200-day moving average, go above $70,000. And then, we can officially call the bottom of the market. But this is where I've been saying we got to be patient. We are in the bottom zone. But I think we need some strong momentum. The signs are there with the bullish divergence on the weekly chart and much more. But again, we're going to have to wait and see. But this is great, guys. This is what we want to see. This sets up the guidance for how people can invest and launch tokens and much more. It's really, really amazing. So shout out to the folks at the SEC and all the great work, Hester Peirce, Paul Atkins, and more. Now, speaking of tokenization, SpaceX IPO powers record $3.86 billion in tokenized equities trading in June. So, on chain trading volume climbed 145% from May to $3.86 billion, according to Coindesk data latest stablecoins and tokenized assets report. Tokenized SpaceX shares accounted for $1.19 billion of total, or about 31% of tokenized equity trading during the month. The surge followed SpaceX's $75 billion IPO, the largest on record, which valued the company at roughly $1.8 trillion on a fully diluted basis. Backpack Securities SPCX token was the most popular tokenized version of the stock, with $1.08 billion in on-chain trading volume, followed by XStock's SPCXX, which reached $852 million. Folks, this is profound. You had SpaceX, one of the largest IPOs, I think, well, actually, the largest IPO ever, right? But a lot of the trading activity was happening on chain. So talk about a change of times. And guess what? As things progress and we get regulations and the infrastructure is set up, you're going to see more trading on chain versus the traditional rails over time. Now, I'm not saying that's going to happen next year, right? It's just over time, maybe within the next 5 to 8 years, right? So that's where we're headed. And we know all the stock exchanges, all the major institutions, they're looking to put all the assets on chain. And I believe eventually when people go public, they're not going to go public the traditional way. It's going to be on the blockchain, guys, and multiple blockchains and multiple platforms. So this is a sign of things to come. It's amazing, guys. It's an exciting time. And, we just talked about the SEC is going to provide the guidance around this tokenized securities, because obviously stocks are securities. And I think once we get the guidance, you're going to see the innovation and the adoption skyrocket. So great things are ahead. Now, we have some updates around crypto exchanges. So crypto exchange Kraken is trying to become a bank in Europe. So it's amazing that crypto firms are getting these banking licenses here in the United States. They're trying to do it across the globe. So Kraken's focus is on Lithuania as the jurisdiction to secure the license, according to a person familiar with the plans. And remember, their IPO is on the horizon. I think they're waiting for us to be officially back in a bull market before they go IPO, but they've been doing a lot of acquisitions and a lot of expansion. And I think they're going to be one of the biggest crypto company IPOs in the industry. Obviously, Coinbase was the first to go public, as far as a major company and having one of the largest IPOs. And recently, or I should say last week, Securitized, the tokenization firm, went public. They went via a SPAC merger. But Kraken's IPO is one to watch because of all the acquisitions and the building they're doing, man. It's pretty incredible. And again, these guys are becoming banks. They're becoming like fintech companies, not just crypto exchanges or crypto app. It's incredible what's being built. So they're trying to get the European banking license, and it's amazing what's happening. And here, Coinbase secures UK authorization to offer traditional investments alongside crypto. So you see the race is on, right? All these guys are going to position themselves across the globe, sticking their flag in the ground. And they're not only offering crypto, they're looking to offer stocks and other things. So this is where the competition's heating up, not only among the crypto firms, but with the TradFi institutions who are doing the inverse. They have the traditional assets like your stocks, ETFs, and other things, and they're adding crypto, while the crypto platforms and apps have crypto and they're adding stocks and futures and all these things. So pretty incredible, guys. I love it. The competition is great. It's healthy. It gives us more options. It helps keep the players honest, because if they don't do a great job, they're going to lose clients. And I've been saying for a while, you guys know over the years, if these native crypto companies don't do a great job, they're going to lose market share, and some of them could go out of business, because the TradFi institutions like your Charles Schwab, like your Vanguard, right? And Morgan Stanley and much more, they are launching crypto. They have a huge customer base. They have the white glove service. They have the custody, all these things intact, right? They have the branding. People are familiar with them. It's very easy for them to go out and say, hey, John Doe and Jane Doe, you've been a client of ours for 30 plus years. guess what? We now offer crypto and much more. Come invest with us, right? It's going to be very easy for them to do that. So this is where these crypto native firms like your Coinbase and Kraken and much more, they need to up their game. And I think they're trying to do that with these licenses and offering a diverse amount of assets. So eventually, guys, I've talked about it on the pod, even with guests I've interviewed, that the markets will all become one. It won't be crypto and stock market and whatever else, right? It'll all be one market, especially as it's all going to be running on blockchain rails. Final news item, EDX Markets raises $76 million in funding round led by SBI Holdings. So we just talked about SBI earlier, but EDX Markets, an institutional cryptocurrency platform, said it raised $76 million in a Series C funding round led by SBI Holdings. The company plans to use the funds to develop new products and grow internationally. EDX operates an institution-only crypto marketplace that separates trading from custody and settlement through a central clearinghouse. The model is designed to reduce counterparty risk and mirrors the structure used in traditional financial markets. Folks, this is a microcosm of what's being set up. And again, institutional only. The institutions want exposure. Guys, this is why I've been preaching nonstop. The institutional on-ramps are being set up. They're still being built here. Yes, there are some live, but there's still more to go. And I think once we get crypto legislation passed, not only here in the United States, but across the globe, like the UK did, and obviously the EU has it already, and other countries and jurisdictions, more capital will flow in. And now this is not even about retail anymore. They're building it for the wealthy, big money individuals. So SBI Holdings has been one of Japan's most active financial groups in crypto. Its SBI VC Trade unit offers access to Ripple's RLUSD stablecoin in Japan, while SBI Shinsei Trust Bank recently issued JPYSC, a yen-denominated stablecoin developed with Stargale Group. So huge investments, expansions being built, guys. They're not doing this for fun. Again, there's still people out there who say this is a scam, a Ponzi, a money laundering tool. And that's where their perception and knowledge stops, right? So this is where you got to be financially educated. You got to watch what the big financial institutions are doing. Where are they putting the money? What are the regulators like the SEC doing? So this is where, again, you subscribe to this podcast because I try to bring that to you, not my opinion, but rather here's what is being built. Here are the facts, right? And it's incredible, guys. I got in this market in 2016. I couldn't imagine this level of adoption. And there's more to go. We're just seeing the tip of the iceberg. So I'm excited. I'm accumulating. Obviously, markets are volatile, right? Obviously, you have to have the macro view. So please understand that. Sometimes people come into crypto, they see in headlines, this guy made millions of dollars, and they think, let me buy this coin and let me wait 3 months and I must become a millionaire. That's not how it works, right? So please understand that. Slow your roll, be educated, understand the technology, keep up with it. This is why my podcast is a daily podcast to bring you these updates. Subscribe to the newsletter, guys, because I include a lot of the news elements and the chart data and the educational items there to help you better navigate the market. So make sure you subscribe to my free email newsletter. It's on Substack. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital. Grab a copy and check out my course at mycryptocourse.com. If you want to learn more about this technology, this is the course for you. It is packed with tons of value. It's comprehensive. It features expert commentary. And right now we got a huge bear market sale. Use the code BEAR, BEAR, at checkout to get 50% off the price. So huge sale. That's not going to last forever. So make sure you grab that deal if you, again, want to expand your knowledge about crypto. All the links will be in the description. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.